customers of bankrupt crypto lender Voyager Digital may be less close to a deal than they may have thought. That's because, according to new filings out yesterday, the New York financial regulator and the SEC are actually moving to stop the deal, valued at more than $1 billion, that would see the U.S.-regulated Binance.US acquire bankrupt Voyager's assets and repay at least partially its former customers. So what's the holdup, you may be asking? The regulators, who are nominally charged with protecting investors, are alleging that at least one token involved with Voyager is in fact a security, and as a result of that, probably can't be distributed legally. The challenge here, of course, is that there's no actual determination that it is a security, and Voyager has complained in the past that the New York regulator in particular, that their claims here are hypocritical because it's the regulator itself that would be the one causing delays in distributing of the token, again, because they're now saying that it's a security. In short, it is a mess. Will, what do you think here?
Yeah, we talked about the story yesterday, so it's funny to see it come back so quickly. And yesterday there was an FTC announcement that there's a new legal document saying that they're investigating the marketing practices of Voyager. And so that definitely comes into play here, right? Like if you were marketing poorly and then you have all these different people trying to buy things, like this is like a mess all the way down, up and down this whole story. If we go back into the history books, right, for Voyager Digital, they declared bankruptcy and then FTX was going to buy them. And then that fell apart. Now we have Binance US, but Binance US is caught in the middle of a bunch of things as well. They're supposed to just be like this operating licensed, not really a Binance subsidiary, but an exchange with the ability to claim that they're like associated with Binance. And then we had those details out the other week from, I believe, a Bloomberg or was a Reuters report saying that Binance US has been funneling a lot of money between Binance and Binance US. Like the relationship there and the amount of that money was still up for consideration and for some nuance. But it does mean that Binance US and Binance have a closer relationship than previously thought. And Binance is no friend of US regulators, right? Like there's been an ongoing beef there. So if you just look at like the map, which is, I would love to have a map, all these things, there's like 1 billion different relationships going between all these different parties, and none of them are really friendly relationships. On the SEC side here, that's definitely something to think about as well, because they are going after so many different projects right now. Like it is swatting season. They're going around with a hammer, hitting every project they can. And if they're going against this project and saying like, oh, we don't like some of these assets, we don't like how you're selling them, they could be like securities. Well, that could be an even bigger blow for the industry, which is already reeling from what happened with the SEC and Kraken the other day. Jen, I'll throw it over to you.
Yeah, this is just such a regulatory mess. So Adam, thank you for kind of walking us through the ins and outs of what's going on here. I just wish, and I have to say this every time we talk about the SEC, because maybe somebody will listen one day. I wish that instead of just going after all of these people and essentially not protecting retail investors, not protecting the creditors, that they would just take some time to make some real documentation that lets us know what is a security and what is not a security as it pertains to digital assets. It would just make everyone's life so much easier. And it feels opportunistic from the regulator side. And it feels like, if we don't set these rules now, what's going to happen during the next bull cycle when it comes to regulation? I just see it getting a lot messier. I think an interesting point in the story for me was that Voyager creditors voted for this sale. I think it was more than 97% voted yes, and now the regulator is coming in and delaying this whole thing. So it's just delaying people getting their money back, which seems very counterproductive from a regulatory standpoint for me. Zach?
Hot take, go after exchange tokens. They trade like bootleg securities. They should be treated as such. That way, the things that are actually real and important, like stable coins, can exist unperturbed. While the bootleg securities, the Cell tokens, the Voyager tokens, the BNBs of the world can be targeted as such. It's just silly to me, right? You see news about something happening to Voyager, and the value of Voyager pumps or dumps. You see, it's like the market treats these things as though they are an indicator of a company's health. And I think that that's a terrible look for someone who's going to assert that these are utility tokens that provide function to a platform's traders. I think they're kind of silly, and I think they are sort of this vestigial thing that emerged with the launch of BNB way back when, that probably aren't going to stand up to the scrutiny of the Howey test or any of the other prongs that securities lawyers within the government look at when they try to figure out if it's a security or not, if you can expect this thing to grow in value based on someone else's work. So, hot take, go after the exchange tokens. Please, SEC, leave stablecoins alone. But this is a great place to focus. That's all I got to say. Adam.
Yeah. I think the biggest challenge around all of this is that were that the perspective of the regulators, then that would be a totally reasonable perspective that I think would have broad buy-in, but that's not. The perspective of the regulators is essentially everything is a security unless we say it's something else, in which case it's that until we say it's something else. There was a story out yesterday about an action from the New York Department of Financial Services talking about the CoinMe exchange or something like that, some smaller exchange. And essentially in that argument, one of the quotes was that they talk about how tokens are both securities and then also commodities, which they can't be both because those are two different definitions. A commodity is valuable because of what it is. A security is valuable because of what it represents in somebody else's thing. So if the regulators can't even get their act together to say, hey, these two completely contradictory definitions actually don't apply here, it's just an argument that these things are something that's unique and they need a different regime than the ones that we have. And right now we just see everybody trying to pile everything on top of these, which then leads to situations like this, which are essentially nonsensical and help nobody and hurt a lot of people.